Hello and welcome to the look ahead for Thursday, the 7th of November with me, Fiona Cincotta, Senior Market Analyst at City Index. So after today's crazy day, we'll be looking at Chinese trade data overnight, followed by German industrial production, Eurozone retail sales in the European session, Bank of England interest rate decision, and then tomorrow later in the US, we'll be watching out for the FOMC interest rate decision. So let's kick off with the Bank of England, expected to cut rates by 25 basis points, taking the interest rate to 4.75%. This will be the second rate cut from the Bank of England after they cut at the end of the summer to kick off the rate cutting cycle. Now, the meeting comes as inflation in the UK has cooled to 1.7% year on year. That's down below the Bank of England's 2% target level. We've also seen signs of growth slowing as far as PMI data is concerned, and the UK labour market is remaining relatively resilient, although we have seen a little bit of cooling in wage growth down to 4.9%. That was an area that the central bank has been watching closely, concerned about high wage growth, which is intrinsically linked to sticky service sector inflation. So that's an area we'll be watching. Now, obviously, this is the first budget that we will have had since the first interest rate decision we've had since the budget. Now, the budget isn't expected to change the outlook for tomorrow, but it is expected to see the Bank of England cut interest rates slightly less across 2025. So previously the market was pricing in around 4 to 5 rate cuts next year. Now we're looking at more like 2 to 3. And that's following this budget from the Labour government, which is expected to be inflationary. Given that we're seeing tax increases, but also higher borrowing and also investment. So that's what we're expecting as far as Bank of England is concerned. This is widely expected that they'll cut. So unless we sort of have a very dovish sounding Bank of England, then the pound may not be massively affected, but it will be affected more likely by the outlook, by guidance from the central bank. We're not really expecting, there's another interest rate decision at the end of in December, around the 19th of December, not really expecting the central bank to tee up for another rate cut then. The next meeting after that is in February. Now, whilst we're looking at sterling US dollar, we obviously need to talk about the US dollar. Trump winning the election, optimism of a red sweep, which means that he's going to have potentially, if it does occur, a Republican sweep, then Trump will have a more solid platform to implement his policies, which could lead to more inflationary policies such as tax cuts and tariffs and immigration. His policies are inflationary, which has lifted treasury yields and boosted the US dollar, which explains the big sell-off that we've seen in cable today. Finding support here, though, around that 125.50. So that's the key level on the downside. It was also the October low. Sellers are going to need to take out that level at 128.50 and the 200 SMA at 128 in order to be able to extend losses towards 126.50 level. If we find this holds on the upside, there's 130. Buyers are going to need to get back above 130 and 130.50 in order to create a higher high. This as long as sellers get below that 128.50, then we could see a lower low and an extension of the downward trend, but it does remain consistent with a break below that level. Just whilst we're talking about the Fed, let's have a look at the yen. So the Fed will also cut interest rates tomorrow by 25 basis points as well. Markets pricing in a 30% probability that the Fed will leave rates unchanged in December. So the rate cut tomorrow is fully priced in, but the market will be looking ahead to guidance for the December meeting, where there's a 70% chance that they'll cut by 25 basis points again. Obviously, we've had the elections today, so it'll be interesting to see what the Fed say, if anything, or if it's too soon to be able to assess what monetary policy will look like with Trump in charge. The policies that he's expected to implement, we've said, are inflationary, which means the central bank may find that it's cutting interest rates more gradually next year than initially expected, which is why we're seeing that run up in the dollar today. As far as the next level for for US dollar Japanese yen to extend gains then towards 157 level, which is the 78.6 fib level of the 162 high, the 139 low. On the downside, immediate support there at 151.80. That's the 200 SMA. Below that, then you've got the 150 round number and psychological level, which can offer support. If we get a break below that, then that brings the 158 10 level, which is the 38.2% fib level. So also just going to be having a quick look at Euro US dollar. That was a big move today, the Euro US dollar. Look at down 2% at one point, just down around 1.85% now. So it's weakest daily performance since COVID. On that US dollar strength and on expectations that the ECB will now be cutting interest rates more aggressively than the Federal Reserve. We've taken out some pretty key levels. I said we've got Eurozone retail sales and also German industrial production tomorrow. Retail sales is expected to be positive around 0.4%, and German industrial production is expected to fall amid ongoing weakness in the manufacturing industrial sector in the Eurozone's largest economy. Just as far as the chart's concerned, look, we ran into resistance right there at the 100 SMA, 109.35, bearish engulfing candle straight through the 108 level, straight through the 200 SMA. This is a rising trend line which has been in place since the end of last year. So we break below that as well. So that's what we're going to be looking for. Sellers are going to be looking for a close below that level. That brings 107 into focus. And then below that, you've got the 106.60, which was the low that we saw back in June. Any recovery needs to get above 107.70. That's the rising trend line, and also the 108 level to try and negate that near-term sell-off and open the door to the 200 SMA at 108.80. Just also, we're going to have a quick look at what's going on with the DAX, because whilst the DAX started the session in positive today, it did actually end negative and quite firmly negative on concerns about what Trump in charge of the White House may mean as far as tariffs are concerned for Germany, particularly for its automobile makers and for global trade. So, I mean, we're just watching here, testing this at 19,000. We're just testing the 50 SMA, but 19,000 level left. If we get continued weakness, follow through selling, brings the 100 SMA in at 18,640, and below that we've got the 200 SMA there at 18,350. On the upside, buyers were going to be looking towards the all-time high, but we've got that long upper wick, which suggests there wasn't much buying demand at those higher levels. So look out for 19,000 to extend the to create a lower low. But otherwise, if we do find that level hold, then maybe we could look towards all-time highs again. And just finally, with the Federal Reserve, as I mentioned, they expect is the stock market that we're looking at. Nasdaq's just approaching all-time highs. If we do get a slightly dovish sounding Federal Reserve, that may be enough to tip the Nasdaq above 20,750 to a fresh all-time high. On the downside, any supports there at around just below the 20,000, 19,950. That seems to be the level. On the downside, that could create a lower low. So I hope you like everything that we've seen, and you do, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.